Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be going over capital gains tax rates and laws and how you report them on your tax return, and showing you what the IRS requires and what you can deduct to get a bigger refund when selling any assets. So I'm going to get the video started here. Now basically everything that you own and have in your home that you own is considered a capital asset, but you don't have to report it all to the IRS when you sell those items. But some of the items that you do have to report would be household furnishings, stocks, bonds, coins, stamp collections, any gold, silver, precious metals, business property, and a few other items which I'll go more into detail with. Now you can see the first item I have here is your home. When you do sell your house or any vacation homes or rental homes, you do have to report those to the IRS, but there's some specific rules on selling a house which I'll go more into detail with to show you how to report those. When you do report the sale of assets to the IRS, you have to show what you paid for that item and what you sold it for, and then you're taxed on any gain there. So if you bought something for, just to make it easy, $5 and you sold it for $10, then you're going to have a $5 profit, and that $5 profit would be taxed. You report all of this on Schedule D of the 1040, which I'll show you later in the video, the form, and we'll walk through the form real quick. I'll show you how you fill that out. But if you, at any point in this video you want to see more about filling out the forms and how to get other deductions, you can check out our website, HarborFinancialOnline.com, where you can prepare your return directly online through our site. So I'm going to get going with the video. Any losses that you want to deduct for the sale of capital assets can only be investment property. It can't be anything for personal use, so it has to be like stocks and those kinds of items that you'll get the deduction on your tax return. The IRS only lets you deduct up to $3,000 per year. Anything more than that, you have to carry to the next tax year. So say in one year you had $5,000 in deductions, you can only report $3,000 for that specific year, and then you would carry over $2,000 to the next year. So you're still going to get the full deduction amount, but they just cap you at the $3,000. The different tax rates for the sale of capital assets would be 15%, 25%, and 28%. And when you prepare your return, it's going to automatically put you into the right tax rate depending on what tax bracket you're in. On our site too, you can use the online tax calculator where you can figure out what items you're going to be taxed on and what not, and what bracket you're going to fall into if you have any sales of capital assets. Now, like I said in the beginning of the video, I wanted to touch on selling a home because this is kind of an important area to understand, since a lot of people have been selling homes, and with the situation with the housing market. The IRS lets you exclude up to $250,000 if you're a single filer if you sell your house. So if you had a gain of $250,000 on your house and you're single, you don't have to pay tax on that. But anything above $250,000 you do. If you're filing jointly, be married, you get up to $500,000. So basically, by having this exclusion, the IRS is letting you not pay any tax on the sale of your house. But that's only your primary house, your residence. But any vacation homes, second homes, you're going to pay a regular capital gains tax rate. You're not going to get these exclusion amounts. So you can end up paying a lot of tax on the sale of other homes and rental homes. Now, when I said the cost versus selling price is what you're taxed on, with a house, any home improvement costs are part of your total cost. So you need to keep track of all those improvement costs that you had. Keep the receipts, keep a log, the documentation of each home improvement item you've done over the years, because that's going to lower the amount of taxes you pay. Especially if it's a rental home or a second home, you definitely want to keep those. And if you're selling just your primary home, then it's not really that important to keep this documentation. But for any kind of second home or rental home, you should. The sale of capital assets falls into two categories. You have long-term and short-term. Short-term is going to be any items you held and sold for that you had a year or less. Long-term is going to be more than a year. So with stocks, you're really going to have to decide if it's short-term or long-term, depending on how long you owned it. The next area I want to go into is how to use our website at harborfinancialonline.com, and I'm going to take you to the form Schedule D and show you where these numbers go into when reporting the sale of capital assets. So I'm going to first take you to the site. Here's our website at harborfinancialonline.com. You can go through the website and check out any other areas we have on capital gains and assets and other deductions. And all this is a way to increase your refund and prepare the return easily online. So hopefully you enjoyed this video. If you have any questions, send me an email at expert@harborfinancialonline.com, and hopefully you'll check out some of our future videos. Thank you.